All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Monday, July 10th, 2023. Thanks for joining me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Full week, no holidays this week, no holidays until I believe September, Labor Day, so that's always nice. Let's go ahead and get started. New week, ready to rock. Got some work to do. Good morning, Clifton. Dow futures up 31 points. Nasdaq pretty much flat, up down about 6. S&P is flat, 44.33. Russell 2000 futures flat as well, 1878. 10-year Treasury yield starting to climb a bit, 4.074% is where it is now. The yield 102.49 for the dollar index. That's up. Volatility index at 1542. That's up about 4%. Crude oil down about 0.74%. We got out of those longs last week. $2.56 for gasoline futures. 19.19 for gold, down 0.67%. Silver 22.97. That's down 1.37%. Copper down about 0.75% this morning. Dollar yen 142.34. Nice bounce off support. That's up this morning. Pound dollar down 74 pips, 127.60. 109.49 for the euro dollar, down about 20 pips. Bitcoin futures down about a quarter point, and Ethereum futures flat at 1874. There we go. So let's go ahead and start with this morning. We're going to go over the earnings calendar, and then I also did a video, if you haven't checked it out, on Saturday for the recap of the week and preview of next week. So if you want to check that out, that'll have some charts and explanations, a little more of a deep dive. It's a little bit longer video. But let's go ahead and go over the earnings this morning. You can see that that is on our market blog. If you are interested in joining, make sure to go to www.gar.capital. Link is in the description as well. You'll get all the information you need, and it's free for all who want to join the live market blog. Okay, so kind of the first couple of days, I'm not really worried about any of these names. I don't trade them. Delta is one that we've traded. Let's go ahead and take a look at it together. We'll go ahead and start with DAL. DAL, I have an alert above 48.83. Let's go to the weekly to take a look. 48.83 is the top of this June or May highs. So we want to break that and then target the $50 range. We'll go to the daily to kind of give us a look, and you could see pretty much 1-year highs, 52-week highs on DAL. Should we get a little more of a boost, maybe we get a run up into earnings. Again, the $50 calls, I'd want to get out of them before earnings. Let the runner do the work in terms of earnings. Have one contract and see what we get. What else do we have here? We also have PepsiCo doesn't have a ton of options volume. JPM I played last week and got chopped up. Let's see if we can get this one again. Above 145.92. There is a gap to fill at 146. I would target the 147 calls ahead of Friday's earnings. Same deal. Get out ahead of it. And again, you're still getting that breakout on the daily, guys. You're still above that support of around 143.48. We have a gap to fill at 167.02. I don't think we'll get that with earnings, but hey, maybe if we do well enough, we can get to around that 150 area. And if we have 147 calls, that'd be great. So I'm going to keep an eye on JPM. Obviously, keep an eye on the volume. Citibank is the other bank that is going to report this week. A little more of a downward trend. JPM is the better performing stock in terms of the banking sector. You need to get above 47.06. That's your 20-day moving average. Again, we know that is our short-term momentum indicator. So again, we want to get above 47.06. If we do, then we could play the 48s, which is a gap to fill at 48.15. So again, place your alerts and see what we can get as a run-up into earnings. I want to say Wells Fargo was the other one. Yeah, Wells Fargo. BlackRock, there's not a ton of volume. United Health, same thing. 43.64 is the break level here. That's your resistance on Wells Fargo on the daily. If we're looking for a target, maybe 44, 45, you want to keep it relatively close. I don't expect a ton of volume in Wells Fargo unless we get the break above 43.64 and 44. Let's go to UNH. One of my favorite companies to own. They performed great last year. But again, downward slope. So again, maybe give us a chance to buy some more. What I'm looking for here is 411.10 to add some more shares of UNH. We're not there yet. I prefer below 400, but that's fine. We may hit support here on 441. Not a ton of edge to play the stock here unless you're playing downside, but not a lot of gaps to fill at all. So I'm going to have to just ignore this one and leave the alerts open. Let's see if there was anything else here that, no, that's pretty much it in terms of earnings. More of the earnings will pick up as we get through the month. But as of this week, Citi, JPM, Delta, I would say those are the three ones I'm going to focus on this week. So there we go. Let's see if we can bring up Forex Factory this morning and see what do we have in terms of economic data. We're going to go to this week. All right, so Monday and Tuesday, not much going on. I'm pretty sure we'll have some economic data, but nothing at least too important as of yet in terms of price action for the market. Wednesday will be important. That's your inflationary data, CPI. We talked about that in the video. Anything below 0.3%, that's a good sign. 0.3% on a month-over-month basis. CPI, if we hit a 2 handle, which is 2.9 or below, that's where you're probably going to get that pop, that short squeeze pop. And again, this is ahead of the Fed raising rates. Again, that's priced in 25 basis points. So if we get less than expected inflation, which is highly possible, gas prices have continued to be down. I mean, I know we got a little bit of a pop lately, but again, this is the CPI for last month. So for June, we hit, again, June, July were the peak in terms of inflation last year. So again, we take the largest part and we see how much the data falls. Core CPI 0.3% is the expectation. We also have a 10-year bond auction as well. We're going to keep an eye on that. So Wednesday being a more important day than any. The first 2 days, we're going to see probably positioning ahead of it. So I wouldn't be surprised if we don't do much today. Core PPI and PPI will be reported on Thursday. If you've noticed the last couple of reports, the PPI, Producer Price Index, has been lower. So Producer Price Index is companies and what's the inflation for them. If the PPI is low, granted all things being equal, and corporations lower their prices, don't hold your breath. Again, it's all about profit margins. So again, if PPI falls, I mean, that is always a good sign for CPI. That is more of a leader. But again, that is dependent on the companies that want to go ahead and actually lower prices and reduce those margins. I don't think Procter & Gamble or food companies are going to run out and lower prices just because. It is a supply and demand market, and it's about maximizing profits, not what's best of the consumer. That's just economics, guys. That's not a statement politically or socially. That's just the reality. We also have unemployment claims on Thursday. That's every Thursday. FOMC member Waller will speak, and University of Michigan Consumer Sentiment, as we know, is basically a survey on gas prices because that's the most important thing to consumers. When people think of inflation, they think of gas prices. And the reason that is really because of the 1970s when we had the energy crisis and those gas lines. That left an imprint in a lot of Americans. So again, gas prices are such a delicate part of our economy because that is kind of like the Dow being the scoreboard for consumers. You know, if they see high gas prices, they're going to probably be less likely to travel, less likely to drive, less likely to buy discretionary items. You know, if gas is $5 a gallon, more likely you're not going to go inside the 7-Eleven or the whatever gas station you go to buy a soda, Red Bull, or a coffee. But if it is, you know, really cheap, below $2 or $2.50, you're probably more likely going to go inside to the gas station and get yourself some snacks. Again, it's consumer spending. That's really the key. So that's where we are in terms of economic data this week. We got some stuff going on. Let's go to the charts together. And again, guys, if you have any questions, feel free to type them in the chat box. If I miss any of your questions, please comment and I will answer them for you. Let's go to S&P 500 futures. I posted this yesterday on the blog and on Twitter and on Threads. If you haven't followed us on Threads, we are on there. GAR Capital, all one word. 44.20, 44.26, looking to be support. We bounced off there very nicely. Let's see if we hold. In terms of the daily on S&P, we're right near the 20-day moving average. Very, very important. If we break below that, that could indicate a trend change and we could start shorting. But so far, so good, we are holding up. So let's keep an eye on it. Let's go to the NASDAQ and see where they are in terms of the daily. And here we are. We are, again, above the 20-day moving average. So we're at a point of, inflection. Where are we going to go? So we do have CPI. That might be that big move up or down as we are kind of just hovering right now on the 20-day moving average. So let's kind of give ourselves a little bit of a roadmap on what to expect if we break down below. If we break down below 15,000, that's the level you're looking for. If we break below, then we're talking about 14.7. That would be the next leg down. That was the change in contracts. Again, so that gap is not really a price action gap. If it is more like a change of contract. The contracts roll over the change in price. How do I know that? How do you show that? You go to futures and you can see if we go to here, NQ, see if I can bring this up. There's multiple NQ contracts. So again, keep an eye on this here. Let me see if I can get this going up here. NQ, again, here we go. So you can see the price difference based on the contract expiry. That's really where you're getting the different prices. So if you go to June 24th, you can see there's a bid on NASDAQ of around 15,639. Yet we're at 15,167 today. So again, if we held these levels, let's just say until the expiry of September, then we would just go into the next contract, which is around 15,359. It's just rollover. So again, that will change. That can change. Just this gap that you're probably seeing here. Again, that's just a rollover in terms of the contract, as you can see right here. So let's not put too much emphasis there in terms of the gap. Let's just let the price action tell us, hey, below 15,000, that's a level of support. How about below 43.70? Same deal, below 4,400. So again, we want to make sure that the price action is lined up to what exactly we're expecting, but we want to see breaks first than anything else. And we have not broken the 20-day. Let's see if we break that first. Joey says, good morning. Can you briefly explain the analysis that determines if you buy a put or a call? Is it pure technical, break of support, resistance, EMAs? It's really based on the simple fact of momentum. Up or down, it doesn't matter. The only thing we don't want is chop. And then we go to the volume and see, we want to buy something. We want to buy contracts, again, that are in demand. I don't want to buy something that I can't sell. It's easier to sell Toyota Corollas because they're probably the most, used car on the road than it is to buy a Rolls Royce. Rolls Royce, yes, they're more expensive, but it's harder to find a buyer. So again, we kind of focus on names that are always trading. The Teslas, the Apples of the world, Microsofts, the SPYs, the mega cap names, because they always have demand. Yes, you can buy contracts on United Health. Not a ton of volume there, not a lot of demand. So buying something is easy, but selling it at profit is a whole different story. So again, if you're someone that doesn't want to kind of keep up with day trading, you just buy an ETF, a dollar cost average, buy an S&P 500 index fund, and call it a day and leave it that way. But in terms of kind of like how do we do things, it really is based on technicals. We'll also have to look at macroeconomics and see if that's supportive. And then we also want to see if the volume and our targets are lining up. Good morning, Carlos. What do you think about Meta? Meta was a price increase, raised today, this morning. Let me go ahead and get that headline for you guys on the blog. Let's see if I can bring it up. Got a lot of stuff going on here. This morning, here we go. Evercore says Threads could generate $8 billion. This is Meta. In 2025, revenue for Meta as number of users exceed 100 million. Over the next couple of years, and I quote, we estimate Threads could potentially close 200 million daily active users, 10% penetration or close to the 240 daily active users Twitter had at the time of its acquisition. And it could generate $8 billion in revenue, 5% upside from our current 2025 revenue estimate for Meta. Assuming 50% incremental margins, wow, 50% margins is pretty great. We estimate that $8 billion in Threads revenue would generate about $1.50 in incremental EPS, earnings per share, or about 6.7% accreditation to Meta's accreditation. Meta's 25 estimate EPS, the analyst said in a client note. So the analyst reiterated an outperform rating on Meta platforms as well as a top pick designation. His price target on the social media giant is around $350 a share, $350 a share. So let's go and take a look at Meta on the hourly. We played this last week for momentum. We got chopped around. So what we want is a complete breakout. If we get above 296.83, I would take a look at the 300 calls. They may be a little expensive, but at least we can catch them rather quickly if we retest 300. Tough one to trade because we can either wait to confirm the 300 level, the break, or we can wait for 396 and that'll just save us $3. So again, maybe just wait for the 300 break, but that 296 would actually wake us up. Here's the key on Meta is that we have a gap to fill on the daily around 314.42. That's the 23.6 Fibonacci retracement level on the daily. That is my short-term target on Meta. The problem is that we got dropped on Thursday and we got chopped on Friday until the end of the session. We pushed and then we fell. So again, the price action hasn't been the best. We have traded Meta last week. I got 160% as high as that and I got out. And then we tried it one more time and it didn't work out. So we're going to be a little careful on Meta. We know where Meta is going to go. The problem is when. And that's the problem. Time is the enemy when it comes to options trading. Good morning, Carlos. Hope all is well. Yes, it is. Thank you, Jack. Thoughts on SPY? Let's take a look at it. SPY, just like ES, we trade ES too. Let's go and take a look at the daily. Again, we're above the 20-day moving average, 437.01. We want to stay above that. If we break below that, then 435 is definitely on the way. 434.75 or so. Let's go and take a look at the hourly. Again, we want to see a break of above 444 to play longs. That would be a breakout. But again, below 437.02, 434 is your level to around 431. And the major level being about 430. So again, we're still in that seasonality where the first 2 weeks of July are very, very bullish. So again, take that with a grain of salt. We'll let the market decide what it wants to do. And all we're going to do is ride the wave. Also, thoughts on Microsoft. Let's take a look at it. Microsoft, we do have a gap to fill to the upside, a very small one, right around 336. Waiting for a break around 343. Then I'll play the 350 calls if we get a little bit of a boost. Right now, we're just in Flatsville, so not much going on. I do love Microsoft, but again, I need a break of around 343 to target 350. In terms of what's the expectation, I'm looking at my stock market almanac. It's based on the history of the stock market, at least through a longer period of time. I think it starts from 1950 to this year. And the 13th and the 14th, Thursday and Friday, are bullish days according to the seasonality. To be fair, last week's Thursday was a bullish day too, and we were red pretty bad. So again, take that with a grain of salt, but at least the almanac, historically speaking, the 13th and the 14th look to be the strong bull days for now. If we go ahead and take a look at the week after, bearish day would be on the 21st and a bearish day on the 17th. That's what we have for the next week. Again, after the first 2 weeks of the year, of July, that's the expectation, at least historically speaking. But again, anything could change in that aspect. Look at Meta starting to push a little higher now. Now it is trading around 295. The worst part about this is that we know where we're going. We just ran out of time, which really sucks. If I would have made this trade, the 300 calls that I wanted to do, for next week, would have paid a little extra, but we probably would catch this with this momentum, but it's just so much risk. So Meta has been a tough one to trade. Let's see. Well, mixed. We did really great on the first one. The second one, not so much. We'll see if we can catch that one more time, but we need a break. Is OPEX this week or next week? It is next week, not this week. No, this week we have CPI and we have PPI. That's really it. The next week, I believe, not much on the calendar other than OPEX and retail sales. The week after, we have the Fed FOMC meeting. And there is no meeting in August. So imagine, if they pause and there's no meeting in August, that's 2 months of no rate hikes. That's 2 months. Including June's pause, that's 3 months. Does that sound like a hawkish Fed to you? I think it's all jawboning. I think the Fed, what they want to do is talk their way into lowering inflation by making the stock market get a little jittery. Because the stock market goes up, that's inflationary, guys. Period. That's really it. We already talked about the dollar and the S&P 500 inverse correlation. The dollar goes up, the S&P goes down. The S&P goes up, the dollar goes down. Usually, not all the time. But the CPI number is going to be important. Every CPI number is important. But again, this one's going to be key to really give us the hint if the Fed is going to raise rates again or will raise rates in July this year. Excuse me. But again, August does not have any kind of rate decisions. The last time we had a month off like that was January. And if you remember it in December, they did a 25 basis point hike after doing 50s. So it's kind of been showing the pattern that the Fed, ahead of a month off in terms of any kind of meetings, they tend to go softer than expected, not too hawkish. Now, again, all this can be changed if the inflation reading is hotter than expected. We will see. That's why Wednesday will be very important. That is at 8:30 in the morning on Wednesday. We will be with you to go over that number as well. If you are interested in keeping up with Fed news and any kind of economic data, feel free again to join our market blog. It is free for all. There's Meta dropping now pushing and dropping. So I'm watching it here on the bottom left corner of my screen. That was kind of fun. So we'll see what we get. Short US dollar position by hedge funds bullish for equities. That would be bullish for equities, yes. That would be bullish for emerging markets. That would be bullish for equities as well. So that was something that I posted. Again, you could see hedge funds have flipped to a short US dollar position for the first time since March. So what does that tell you? Do you remember how March was in terms of the stock market? Pretty good. So 2021 towards the tail end, you could see we had short dollar positions towards the end of 2020. We had that boost. So again, once we have short dollar positions, we tend to do pretty good in terms of equity. So it doesn't matter if hedge funds are long or short, but again, follow the flows. That's kind of the key, follow the flows. And here is the flows. Let's see if I can get that here. Let's see. Net flows into global equity funds increased in the week ending July 5th, largely as flows into US equity funds turned positive, plus 15 billion versus 2 billion the prior week. Pretty small, my apologies, but again, you can see a boost in terms of the 4-week moving average in terms of the global flows into equity. So money is flowing into stocks, at least on a global basis. Usually a good sign. And thank you, Jack. You have a great week as well. Thank you guys for joining me this morning. I appreciate you all for joining me every morning at 9 a.m. Eastern Standard Time. Let's make it a great week. Let's make it a great trading day. And I will see you on the live market blog in about a couple of minutes. Have a great rest of your day, guys. Cheers.